This is the Asia Trade. I'm Shery in Tokyo.
I'm Haidi, Stroud-Watts in Sydney. The top stories this hour. Iran fires about 200 ballistic missiles at Israel in a sharp but brisk escalation in the conflict between the Middle Eastern adversaries. Oil led a surge in haven assets, with the flight to safety sending US stocks lower as geopolitical tensions escalate. Takeshi Niinami, who's a president and CEO at Suntory Holdings, joining us for an exclusive interview on the outlook for Japanese businesses post the LDP leadership election. We do have breaking news just crossing the Bloomberg when it comes to that reading on Korean inflation there. In fact, South Korea's September CPI levels rising to the slowest pace since February 2021. So that year-on-year reading for CPI for September coming in at 1.6%. That is markedly lower than expectations of 1.9% from analysts, and really a significant slowdown from the 2% that we saw in the previous reading for August. Month on month, that's a number of 0.1%, so hardly any move at all. Expectations were for a gain of just shy of 0.5%, and that has certainly slowed from the prior gain of 0.4% there as well. So it's a very interesting kind of picture when it comes to South Korea, particularly as we see that export growth side really maintaining that momentum on the back of strong chip demand. And at the moment, we are seeing that inflation picture really significantly slowing, Shery.
And this is a picture across Asia, Heidi. We are setting up, of course, for the open. And what we're watching will be those oil-related stocks, given the rising geopolitical tensions in the Middle East. When it comes to safe haven assets, we'll be watching the Japanese yen, gold, although yen really not reacting like a haven asset right now, still pressured by the fact that we're really factoring in where the BOJ and the Fed goes from here. But take a look at the other side of that trade. The U.S. dollar gained ground, of course. We had bonds also gaining ground. We had U.S. weapons makers gaining ground as well. Although overall we did have tech being one of the worst performers, which weighed down the broader index. And we're, of course, watching those economic numbers as well, showing more resilience for the labor market. But all of that offset by the fact that we're following oil prices at the moment. We saw that huge spike in the overnight session. Crude, again, above $70 a barrel, Heidi, and all to do, of course, with really the OPEC member Iran being directly involved in the conflict now.
Well, Israeli Prime Minister Benjamin Netanyahu has vowed to retaliate after Iran fired about 200 ballistic missiles at Israel on Tuesday. President Joe Biden says the Iranian missile attack has been defeated and the U.S. will continue to monitor the conflict in the region.
At my direction, the United States military actively supported the defense of Israel, and we're still assessing the impact. But based on what we know now, the attack appears to have been defeated and ineffective. And this is testament to Israeli military capability and U.S. military. It's also a testament to intensive planning between the United States and Israel to anticipate and defend against the brazen attack we expected.
Let's get over to our political news director for Bloomberg TV and radio, Jody Schneider, joining us now. We do have disconfirmation from the IDF Twitter account saying that they are undergoing still these attacks on terrorist targets in Beirut. So, these Hezbollah targets are still under attack in Beirut by Israel. What are we expecting now, though, in terms of the scale of retaliation and the broader scheme of things now that Iran has fired ballistic missiles at Israel?
Yes, Heidi, this is what everyone had been worried about in terms of this so-called broader war. We've really had, and now this whole thing going back and forth, the so-called tit for tat, now that Iran has retaliated in this way with significant air fire, significant missile fire, which has largely been beaten back by Israel. So far, they think there's just one death on the West Bank, and most of these have been pushed back. But the real question now is, what does Israel do in response? Also, what does Iran continue to do? This is not necessarily the only strike that Iran is going to make on Israel. And we heard from Benjamin Netanyahu today, the Prime Minister of Israel, who came out and said that Iran had played its hand too much, that it had made a wrong choice, and that it will be sorry. So clearly, Israel is not likely done. They had already started a ground incursion into Lebanon against Hezbollah, but also, is Iran done? And who else joins in this? The U.S. has taken a calmer posture. You heard those words just now from President Biden, but still, if this does broaden, the U.S. is going to have to get more involved, at least diplomatically.
Jody, we know that geopolitics normally doesn't feature highly on a presidential election, but we do have the vice presidential debate. What sort of rhetoric will we hear about security for the U.S.?
Yes, I can absolutely imagine that will be part of this tonight. And the questioners, the interviewers will be, I'm sure, asking about what would each of these candidates do and what would they expect their running mates to do to try to quell a larger conflict in the Middle East. And it does have implications for the campaign going forward, as well as many other things. We have a port strike that just started. There's devastating storms in North Carolina. The fallout from that is having some ripples on the campaign trail. So a number of things. But certainly this and what we see in coming days from both Iran and Israel will certainly figure in the campaign going forward. It is 5 weeks to Election Day. We'll be getting those results 5 weeks from tonight. So certainly this is a very key time, and that vice presidential debate is going to give us a taste of that.
Political news director for Bloomberg TV and Radio, Jody Schneider there. Let's bring in for some more analysis Carmiel Arbit, who's a non-resident senior fellow for Middle East programs at the Atlantic Council. Carmiel, really great to have you with us. And of course, this is a fast developing story, and I suppose everyone's wondering what comes next. There's a lot of speculation that Israel might use this time to target Iran's nuclear facilities. There's also some concern that perhaps, that there is thinking in Iran that this might be time to start thinking about, the actual mobilization of those nuclear capabilities.
Yeah, thank you so much for having me on. I think that the points that you raise are exactly right. As Israel decides right now what its retaliation will look like, and the cabinet has been meeting throughout the night to make that decision, it has to decide whether or not it's going to escalate further or continue to localize its response to engaging with Hezbollah. For the Israelis, of course, the objective here had been to enable its nearly 100,000 displaced citizens from the north to return to their homes, to push Hezbollah back to the blue line, sort of further up north where it had agreed to be under a UN agreement. And third, to deplete Hezbollah's arsenal. Now, it certainly has made significant steps in the latter two of those objectives, but now that Iran has become directly involved in conflict with Israel, Israel is going to consider very seriously that type of retaliation, which would significantly escalate this conflict into what could potentially be a full-blown regional conflict, and one with great danger.
Does the outcome and where we go from here really depend on what you think about what Israel's strategic objectives are, right? Because so far we've heard about obviously the tactical objectives of responding to, regional and immediate security threats, but do we know, with any certainty what the underlying strategy is?
Yeah, I mean, the key piece for Israel has been regaining its deterrence. So after October 7th, and we're 1 year into the anniversary of the Hamas massacre in Israel, on October 7th, Israel has yet to accomplish all of its goals in Gaza. And what we had seen on that day just 1 year ago was Israel's military had really turned away from the threat that Hamas posed. And in the process had sent a message to the region and frankly to the Israeli people that perhaps its military was not as strong and capable as so many believed it to be. What we've seen in Israel's response and actions in Lebanon is that the military is actually just quite as capable as Israel had led everyone to believe. They've really been tracking the threat posed by Hezbollah and Iran for a very long time, had been preparing for this conflict for a long time, and had really seen this as the greater threat to Israel's existence. It was always the more existential threat, if you will, than what Hamas had posed. So I think Israel's overall objective here primarily is deterrence, and then will be stability and restoring stability for its own people. Whether or not how it chooses to accomplish that will change based as well on the Iranian response.
Could deterrence also be the ultimate goal coming from Iran, given Israel's actions towards the killings of Hezbollah leaders and other high-profile leaders in the region? Because I'm thinking, how is this different from the other direct attack earlier this year in April?
I think for Iran, the key question here is one of legitimacy. The Iranian regime derives its legitimacy in so many ways from its ability to exert itself as an influential presence in the region, and it does that through its proxy armies that are operating on Israel's borders. That has been undermined and shaken in so many ways. I think that Iran had to respond to the killing of Nasrallah because it reflects so poorly on Iran and, again, its legitimacy at home. So I think the calculation for the Iranians is slightly different.
Exactly. So I'm wondering what's the likelihood of this escalating if Iran also just wants deterrence? And we know that Israel has been criticized even by the United Nations. Internally, we're hearing that officials are not too happy with some of Israel's military overreach.
Yeah, I think that, again, the calculation for both countries is going to vary. I think it will depend. The previous person had talked about tit for tat. So we have seen this action. This was a very serious attack. Obviously, ballistic missiles fall much faster and pose a greater danger than some of the missiles or UAVs that Iran had used in the first attack, which they had launched with a significant warning and which was really intended to send a message. This attack was similarly unsuccessful, but certainly sent a much louder message. I think Israel will feel forced to respond and has made clear that they will. And that response, of course, will then trigger a response from the Iranians.
Carmiel, in a lot of ways, this is sort of overshadowing what we're looking ahead to, which is the vice presidential debate coming up in the coming hours, right? But I do wonder, a lot of this has been characterized by the growing inability for the United States and other Western allies to be able to influence the direction and the tactics that Israel has taken. Do you think that this is going to be an ongoing theme?
Yeah, I think what is quite remarkable is that even when there have been tensions at the political level right now between Netanyahu and the Biden administration, including disagreements over a ceasefire or U.S. efforts to contain this conflict, when it actually comes down to, quote, the moment of truth, we see the U.S. stand with Israel. So the U.S., of course, was involved, as President Biden said earlier, in taking down some of these missiles that were launched over Israel, where the objective, of course, is to overwhelm Israel's defense systems. And so Israel relies on its allies to step in. And so I think what you see is that despite these political tensions, in moments of conflict, the U.S. and Israel are fully aligned, irrespective of party, when it comes to addressing the threat posed by Iran. Now, how that proceeds in terms of escalation or de-escalation, I think we'll continue to see tension points. But when it comes to the battlefield, we'll be seeing them standing side by side.
Iran's president is in Qatar this week. What are some of the roles played by third-party mediators here, especially Doha, when it comes to also ceasefire agreements with Hamas?
Yeah, I think it's interesting to watch how the Arab world has really been split over the defeat, if you will, or this hampering of Hezbollah. We shouldn't say defeat. They've been undermined, but they are not going anywhere just yet. Hezbollah, of course, had worked with Assad in the civil war in Syria. They are a Shia group, and many Arab countries and Sunni Arabs and many Arabs in Lebanon are no friends and no fans of Hezbollah. So it's important to remember those divisions regionally. When we look to Qatar, Qatar, of course, has played an important role in mediating conflicts across the region. They very often and regularly play host to the leaders of groups who are under sanctions by the U.S. and have key access points. I think we will see Qatar continue to try to assert its role as a mediator. But ultimately, as we've seen in the negotiations between Hamas and Israel, it will be up to the parties to really come to the table in a meaningful way.
Carmiel, Arbit, good to have you with us from the Atlantic Council, of course, dissecting all of the tensions in the Middle East right now. And stick around for our special coverage of the vice presidential debate, where J.D. Vance and Tim Walz will face off and attempt to sway undecided voters. That's at 8 a.m. Hong Kong, 8 p.m. New York. And coming up on the Asia Trade, we'll be joined by Pendal Group to unpack the market impact of the escalating conflict between Iran and Israel. Plus, we'll talk about Japan's new prime minister with the chair of the Japan Association of Corporate Executives and Suntory CEO Takeshi Niinami. This is Bloomberg.
Take a look at how oil is trading at the moment as we continue to monitor the ongoing retaliatory activity that we're seeing across the Middle East. The Iran missile attack on Israel really spurring a swift promise to retaliate. We're now hearing confirmation from Israel that they're continuing to attack Hezbollah targets in Beirut. We're seeing oil for much of the session then extending that surge as on that vow of retaliation there. Crude gaining on those concerns that hostilities may disrupt supplies. And this has been a market that has been remarkably sort of calm to these geopolitical tensions thus far, but we are starting to see that reaction now. Let's bring in Amy Patrick, who's the head of income strategies at Pendal Group. Amy, great to have you with us.
Thank you.
How much do you pay attention to geopolitical uncertainty?
Well, I think we all have to always pay that attention, because that uncertainty, whether it's coming from the Middle East or other regions of the world, it always has this potential to shock markets at the most complacent times. But I do also take a longer term perspective to it all. So when you look at especially the history of the Middle East and bigger flare-ups that you've had, what you tend to see are these market patterns. So this is separating how the market reacts from obviously the tragedies that are going on the ground as well. And how the market typically seems to take this news is that obviously there are these types of knee-jerk patterns of reactions, but eventually the markets get somewhat desensitized unless there is a more fundamental read-through. So Russia-Ukraine was an exception because that was such a massive shock to an oil-producing region and a commodity-producing region at a time when a lot of fiscal stimulus was happening in the rest of the world. It all culminated in a massive inflation regime change. Here, I think the probability of that happening is less because the rest of the world is not heating up. The rest of the world outside of the US is not stimulating massively fiscally. We're only at the end of hiking cycles in some places, beginning of easing cycles in others from a monetary policy perspective. So I think the potential for that geopolitical conflict, and the oil price surge that you were talking about just now, culminating in something bigger and longer lasting from a global perspective, is perhaps less this time.
Is that why, or I guess maybe one of the reasons why you also sort of assign less of a global implication to China's stimulus? Because you say this is not also an element in a global reflation risk, really.
Yeah, I do think that, personally I was a bit surprised at how far the markets ran with the China stimulus news. I can understand it for Chinese assets because they've been so beaten down. But until the events of last night, when you looked at the reactions in bigger global indicators like oil, for example, right? In previous periods of Chinese stimulus, when China has stimulated the property sector concertedly, it has resulted in all commodity prices doing really well, including oil, which is a really good sign that markets globally are anticipating a stronger surge in global demand on the back of stronger Chinese demand. Until last night, oil prices were actually down despite Chinese stimulus news being taken very well in Chinese assets. So I do think that it's not the stimulus news in China. It's significant because it's a meaningful step up. It definitely communicates Beijing's urgency, and they're taking the slowdown in the economy very seriously. But I do think that in terms of the fiscal, dry powder that they've got a lot more in reserve. Whether or not they're willing to use it is a question mark for me. 2 trillion Chinese renminbi being earmarked for various fiscal measures to households and consumers, it doesn't really touch the sides.
Yeah, we're really surprised to see almost no reaction when it came to the oil markets, despite that huge stimulus measure coming from China. But what does that mean in terms of the bond rally, that record-breaking bond rally that we saw in China? Is that inevitable?
Well, on the bond side, if anything, I do think that things could change a little bit, right? Especially in terms of the term premium that you should be demanding out of the Chinese yield curve. I mean, a lot of what's going to fund, both the capital injections into the banking system as well as fiscal measures, both currently announced and maybe more in the pipeline, is going to be funded by special government bond issuance, and so that naturally does tend to steepen yield curves if they focus at the longer end of that curve as well. But overall, though, China's problems are quite deep-rooted and structural, in my opinion. And they revolve around three main issues, which is that Chinese households save too much, and that's because there is no great social safety net infrastructure. The birth rate is far too low, and there's a demographic crisis. And then at the same time, they're dealing with this massive property bubble bursting, which is akin to the US version of the GFC. So these stimulus measures, yes, they are more significant than the piecemeal measures that we've seen over the last 2 years, but are they enough to get to the root of these crucial three problems that China is facing? I don't think so.
Talking about steepening yield curves, I mean, it's been really interesting to see how fast-paced that's been in the U.S., especially so early in the rate-cutting cycle. Larry Fink now saying that markets are just pricing in too many rate cuts at this point. Given what we're seeing in the labor market right now, with job openings also surprising to the upside last night, could that be true? And where do bond markets and yields go from here?
So in my mind, I separate what I think is the longer-term cyclical picture to what are the near-term risks because of market pricing. And on market pricing, I agree. I do think that, you know, when the Fed's already delivered a 50 basis point cut, but they've been talking about how the market shouldn't expect that 50 basis point cut is the new pace of easing in this cycle. I think in order to justify back-to-back 50 basis point cuts from the Fed, you have to see much more material weakening in the labor market, which, quite frankly, you know, exactly as you said, the job openings data last night didn't show it, but then, you know, the picture is still a little bit mixed in the labor market, or a material deterioration in the overall economy. And the latest revision that we've had in the Atlanta Fed's GDP nowcast model shows that the economy is actually growing at stronger than we previously thought, so up from 2.9 to 3.1%. That is not a sign of an economy that is on the brink of a massive collapse right now. And so because the bond markets already expect at least another 50% chance that in November the Fed could do another 50 basis point cut, I think near term, if the economy and economic data continues to show this mixed and slightly resilient picture coming out from both consumers and the manufacturing side of the economy, then near term, yeah, bond markets are going to be disappointed.
Amy Patrick, Head of Income Strategies at Pendal Group there. More ahead on the Asia trade. This is Bloomberg. Let's get you the latest from the corporate front. And Bloomberg has learned that Boeing is considering raising at least $10 billion by selling new stock. Sources say the plane maker is looking for ways to replenish cash reserves depleted further by the ongoing strike. However, the share sale isn't seen likely for at least a month as the plane maker struggles to assess the financial toll of the walkout by 33,000 workers. Boeing is on the cusp of seeing its credit rating cut to junk. Billionaire Gautam Adani's flagship firm is said to be planning to roll out its share sale as early as next week. Adani Enterprises is looking to raise over $1 billion through a so-called qualified institutional placement. The share sale comes as to mark the group's return to public equity markets after a scathing report from Hindenburg Research in 2023 that derailed the previous plan. This is Bloomberg.
New Japanese Prime Minister Shigeru Ishiba has pledged to keep up efforts to end deflation. Speaking in his first press conference as national leader, Ishiba also called on the Bank of Japan to keep an accommodative policy to support growth. Ishiba has begun fleshing out policies and naming his cabinet lineup. Among his picks are the government's former top spokesman Katsunobu Kato for finance minister and Takeshi Iwaya for defense minister. Ishiba's near-term focus will be a national election he has called for October 27th. Joining us now is Takeshi Niinami, president and CEO at Suntory. He's also the chairperson at the Japan Association of Corporate Executives. Niinami-san, always great to see you.
Good to see you.
Especially for a reaction of such a momentous moment for Japan. Some people have called this a new era, especially given Ishiba's sort of distance with Shinzo Abe and Taro Aso. What do you think?
I agree with that. He's been, I would say, off-road, main road. So he has many different angles from the long-standing regime created by Mr. Abe and Mr. I think Aso, those, mainstays, right? So we expect that he will bring some new ideas like to revitalize rural economies. So hasn't been shown yet, but I'll expect something new.
That's the point, right? I mean, off-road, but it still hasn't been shown yet in the sense that, do you have any clarity of any of the policies that could potentially affect big business?
Not yet. We feel more or less safe about economic policies of Japan because we are sure that he'll take over the policies taken by Mr. Kishida. That's a really good thing because how we can continue the constant increases of wages, right? And how to mobilize laborers because we lack laborers. That's why that's a constraint to start the buildings of the data centers and lots of investment are waiting, but we need laborers.
And you talked about wages, 7% pay rise for Suntory again for next year. Do you think other businesses will follow?
I think they have to follow. Under the census which we conducted at the Keizai-do Yukai, 70 to 80% of the large corporations already decided to increase, but we don't know how much. But at least 4.5 or at the current, the last year's, this year's level. So I think corporates of Japan are eager to increase wages so that we can retain good people, good talents. I think this is the getting to be a social norm that we need to increase wages.
Have you seen the sort of revival of consumer confidence of, so-called animal spirits when it comes to any changes that you've seen across the market, across the consumer?
I would say yes and no. We have to look at the current activity of consumers. As a matter of fact, it's been more robust than before. The reason is substantial increase of wages. That is now above the CPI. That helps the consumers to buy more things. So it's a good sign. But we have to take a look the actions to be taken by big corporations, whether they'll increase wages or not. And that'll be announced maybe in a couple of months from now.
Earlier in the year, you denied that you were in talks to buy Boston Beer and that there wasn't a level of interest there. I'm wondering if you're keeping an eye out for other opportunities, perhaps more international opportunities. Does that fit into your strategy and approach right now?
Well, I denied it because we haven't spoken about that. And we are now trying to grow, I think, internally. And putting lots of resources to the United States to grow our business of RTDs. So once we set up our footprint in the United States in that space, we'll consider. But at this moment, we don't consider to acquire any business in the United States.
In the United States. What are the international implications for Suntory, especially when it comes to the exchange rate, given that especially Mr. Ishiba now was okay with normalizing BOJ policy, and he seems to be walking back those comments a little bit, and he wants the BOJ to stay accommodative?
I don't think BOJ will be influenced by the Prime Minister's words too much. Anyway,
but the yen will definitely be influenced.
Yeah. But our policy to go overseas won't be impacted by any policy of the BOJ or any impact from the dollar-yen re-evaluation whatsoever, because we want to be global. But there is a huge opportunity to address the aging population, as a matter of fact, in this country, such as nutrition.
I want to get to the aging population and workers, but do your executive colleagues, are they comfortable with the yen at 143?
But as a matter of fact, we set 145. Whether comfortable or not, I don't think so. Well, we should see perhaps 135, so forth. But we expect that BOJ anyway will increase interest rates, perhaps by the end of this year, 0.25 or so. It's our expectation in the market, as a matter of fact. That should happen because we are under the inflation, not the deflation, and close to 3%. And mostly gas and utility are supported by the government. If we exclude that, that should be about 3%.
How closely are you watching the geopolitical tensions, given that now it's really affecting oil prices?
Well, that's a big issue and should not be escalated, but could be escalated. But at the current glut of oil and gas, I think will not affect too much.
When it comes to the aging population and the demographics that you talked about, you're really a big proponent of labor market reforms. Some of the biggest proponents of that during the campaign, Koizumi as well as Taro Kono, they didn't even make the cabinet this time. Does that give you a little bit of pause about potential flexibility in the future when it comes to that issue?
Well, as a matter of fact, the current labor market is, I think, toward the more flexible to find laborers. So, which means labor mobility is much more than before, and that should be, I think, enhanced by the new prime minister. And I don't think the government and the business will talk about how to fire people. Instead, how we can mobilize more, giving the better wages and better conditions to workers.
Takeshi, Niinami, always good to see you, especially here in our Tokyo studio. He's the CEO at Suntory Holdings, and Haidi, of course, is also the chairperson of the Japan Association of Corporate Executives.
Always a great conversation there with Takeshi, Shery. But let's take a look at how we're setting up, given, of course, geopolitical concerns, as we were just talking about there. Really, the theme of the day as we continue to monitor developments in the Middle East. We are expecting Japanese equity futures signalling there some downside when we get into the start of cash trading. We did see almost a sideways or holiday-themed trading session in the previous session. Japan did stage that rebound, of course, after the sell-off. But broadly, we are seeing that outlook for Japanese equities a lot less certain, as we're still trying to sort of gauge those policy signals from the new Prime Minister Ishiba's cabinet, as well as a potential fund rotation, given the outperformance in recent sessions that we've seen out of China as well. It's also interesting, we've been looking at the numbers, and the rally in some of those China-linked Japanese stocks is starting to wane, and asking that question of whether that is a false dawn, given the sort of a slight reassessment of the real impact ongoing on these markets from China's stimulus barrage. Dollar yen is holding much unchanged at the moment. 143.59 is where we're trading. But of course, we're seeing some of those haven assets continuing to rally in the wake of the barrage of missiles from Iran to Israel. Shery.
And of course, Haidi, we continue to watch the renewable sector as well in light of what we saw in the elections here in Japan. And Japan's renewables ambitions could be getting a boost under the incoming prime minister after falling behind its G7 peers on clean electricity and electric vehicle adoption. That's the view from BloombergNEF. Their Asia-Pacific head, Ali Izadi, joins us now. Ali, great to have you in the studio, finally seeing you in person. It's nice to see you.
Thank you very much.
Tell us a little bit about this research that you've done and the energy transition and climate change and how that compares for Japan and its previous leaders.
Yes. So if you look at public statements that the new Prime Minister Shigeru has made in the past, he's appeared somewhat more supportive of renewables and a bit more cautious on nuclear power compared to outgoing Prime Minister Kishida. Of course, we have to see whether this translates into tangible action. A clear indication of that will be the 7th Strategic Energy Plan that has been under discussion since the beginning of this year. That plan will cover 2035 and 2040 power mix targets for Japan, as well as form the basis for Japan's 2035 emission reduction target that needs to be submitted to the UN by November of next year. His choice of Yoji Muto as the Minister of Economy, Trade and Industry is quite intriguing. That's the ministry that's in charge of that plan. And Muto-san, previously, he was heavily involved in nuclear emergency preparedness. Whether that means he's going to be more cautious or not, we have to see.
What about Japan's hydrogen dreams? Where did they go?
So the challenge with Japan's hydrogen dreams is that if you look at its iterations in the past, first, they were heavily based on this dream of fuel cells, which didn't pan out because the technology never became economically competitive. After that, rather than looking at where hydrogen is most suitable for decarbonization, the basis of the hydrogen was primarily because of Japanese utilities building a lot of coal power plants, shifted towards how can we utilize hydrogen as reducing emissions from coal power plants. Again, that's not an economic option. As a result, Japan has fallen behind, for example, Europe, where in the case of Europe, they have prioritized using hydrogen for decarbonizing heavy industry applications that don't have other alternatives.
Ali, Izadi, really good to see you in person here in Tokyo. BloombergNEF, head of Asia Pacific. And coming up, Samsung laying off thousands of workers in Southeast Asia, Australia, and New Zealand. The company is struggling to keep up in the AI market. We have more details next. This is Bloomberg.
Well, Nike is extending declines in after-hours trading as the world's largest footwear company withdraws its full-year guidance. Nike is seeking to reset expectations before incoming CEO Elliott Hill takes the reins later this month. The company reports revenue in its fiscal first quarter has fallen 10%, just short of the average analyst estimate. But Nike's gross margin and sales in China have exceeded expectations.
And Haidi, another story that we're following, Apple is said to be preparing to announce a new low-end phone early next year alongside upgraded iPads. Sources say it's nearing production of an updated iPhone SE that will become its new entry-level model. Apple is also aiming to manufacture new iPad Air models and keyboards for release around the same time. Now, staying on tech, Samsung could be moving at the reopening in Seoul. As sources say, thousands of jobs are set to be eliminated. Shares are down about 20% this year, with the company struggling in key markets. For more, let's bring in our tech reporter, Annabelle Drewlers. And Belle, really the AI revolution making such a difference for so many companies. What else do we know about these layoffs for Samsung?
Well, the layoffs we're hearing relate to the overseas subsidiaries in particular. So we're not talking about the headquarters in Korea, but it does actually affect possibly, well, there are 150,000 staff overseas, and that's more than half of Samsung's entire workforce. The markets, though, where job losses are occurring this time, we're hearing are Australia, New Zealand, and also Southeast Asia. And about 10% of the market or the workforce in those markets could end up being affected, though the numbers are likely to vary among each subsidiary as well. We are hearing, though, that they have got underway. So some of our colleagues, for instance, have spoken to someone familiar in Singapore, and they're saying that on Tuesday, so just yesterday, different people were being pulled into meetings with HR, with reporting managers, and shared what would end up being their severance or their retrenchment packages.
I've also heard that Samsung has been laying off other staff recently.
Yes, we've had other reporting on this as well of late. Those positions could have been eliminated in India and also parts of Latin America. It is important, though, to reflect on the types of positions that are being eliminated. So we're not talking about manufacturing roles. Actually, we're hearing that Samsung is really trying to keep those. What is the focus is management and also some support functions. It is an interesting moment for Samsung. I mean, this chart here puts it in perspective. You're looking at a more than 20% drop for the company versus what we've seen from other high-flying tech companies this year. I mean, it's really had quite a different tale. What is leading to some of those issues for Samsung is the perception that it's falling behind in key markets. So HBM, for instance, is frequently cited high bandwidth memory chips, and this is really key to powering AI tools. Samsung's really playing catch up to SK Hynix here in Korea in this key area. It's also trying to build out its foundry business, compete with the likes of TSMC, but it's still a very far cry from doing just that.
Annabelle Drewlers there in Hong Kong. Let's take a look across the broader commodities complex because, of course, we've seen a lot of that price action responding to the latest developments in the Middle East. As, of course, we've seen oil and some of those haven assets rising after Iran struck Israel with a barrage of missiles at flight to safety, sending stocks lower in the US as well. New York crude is holding on to some of these gains, and really it is this kind of reassessment now that we're seeing across crude traders to extend that surge after we've seen these these concerns really building that these hostilities may in fact disrupt supplies. This has been a market that has been pretty sanguine on geopolitical risk and certainly a lot more worried about Libyan supply, for example, as well as the waning Chinese demand story as well. But the Middle East does account for about a third of global supply, so we are starting to see investors pricing in perhaps a renewed risk premium there for oil, given that Israel and Iran have been facing off since the outbreak of the war in Gaza against Hamas almost a year ago. Previous spikes that we've seen have tended to fade in the absence of actual interruptions to output. We're starting to see that kind of mentality perhaps shift a little bit. Gold at the moment, despite, of course, as we've been talking about that haven demand, a little bit softer, but still holding pretty close to a record as that Middle East escalation is creating a lot of demand when it comes to bullion as well. It did rise toward that all-time high after those Iran missile strikes as well. Taking a look at iron ore, we're seeing a little bit of a comeback there after a breather over the past session. So much of the gains in iron ore have been driven by that China stimulus story as well. And we have also seen some gains across pricing for copper and other industrial metals as well. Again, that China stimulus and prospect of more US rate cuts as well. Well, coming up next, dock workers have walked out of every major port on the US East and Gulf Coast for the first time in nearly 50 years. The strike would cripple the US economy and shock global supply chains. This is Bloomberg.
We saw downside pressure on emerging market currencies after 5 sessions of gains, all to do with this global risk-off sentiment that we're seeing around the world, given, of course, Iran's missile strikes against Israel. The shekel in Israel also continuing to be pressured for a third session, falling more than 1% against the U.S. dollar. Of course, we continue to wait for any more measures coming from Israel and any potential retaliation as the Middle East conflict escalates. Haidi, we're seeing really those safe havens like gold and the dollar gaining ground.
Yeah, it does feel like we're in sort of wait and see mode, despite, of course, still a lot of people very positive when it comes to the outlook for US stocks and the Fed outlook still in play there as well. But you see, in particular, when it comes to the jump in volatility, right? VIX really jumping as that Iran-Israel tensions really look like they are ramping up now. VIX options already nearing the 20-day average, and spot VIX jumping to the highest intraday level since September 11. And we're looking at, when it comes to the volatility of VIX index, headed for the highest close since September 6. So you are seeing that kind of reflected when it comes to the broader downside we're continuing to see across US risk assets trading in the future session. It's a lot for investors to be contending with at the moment, because dock workers have also walked out of every major port on the US East and Gulf coasts, marking the beginning of a strike that could ripple through the global supply chain. The White House is calling for a quick settlement that leads to fair pay, as port owners have faced criticism over record profits. Bloomberg's US economy editor Laura Curtis has been following these developments and joins us for now. And of course, you know, the prospect of Biden intervention, of clearly the White House weighing in, it comes at a pretty awkward time, you know, just a few weeks out from the election.
That's right. We've got a presidential election coming up first week of November. The stakes are super high. Both sides are vying for support from campaigns, from unions and from the working class. And to intervene at this point to break a strike is, you know, that would put Vice President Kamala Harris in a pickle to be part of that White House. So we'll have to see what happens. I think it all depends on how long this strike lasts. But I think we may start to see some pressure on Biden grow to step in and do more than just encourage some negotiations to resume.
Yeah, these 30-plus affected ports are supposed to handle as much as half of all U.S. trade volumes, right? What did the first few hours of the strike then look like?
Oh, well, it was it was a little unclear right at first what was happening. We had we knew that the dock workers were planning to strike at 12:01 if no deal had been reached, which was all but certain until about 5 p.m. Eastern yesterday, when we heard that they had actually started negotiating again, although the last offer extended by the employers to the dock workers was not accepted. So, right up until the wire, we weren't sure if they were going to follow through or come to a last-minute agreement. But here we are. We had ILA President Harold Daggett, standing in front of the picket line last night with the bullhorn, telling his members that they'd be on the picket lines and walking off the job for as long as it took for all of their demands to be met. So really not a lot of forward progress signs, but sometimes you don't know until something's announced.
Bloomberg's Laura Curtis. We'll continue to watch for further developments on those strikes. But take a look at what we're watching when it comes to some of the trading in safe havens. Of course, we saw that surge across haven demand on these Middle East tensions. Havens as well as oil, really the biggest beneficiaries there after Iran fired that barrage of missiles at Israel. That flight to safety also sending risk assets lower. We are seeing gold looking a little bit tepid at the moment, but I should point out that we have seen pretty close to record highs. And in fact, that price still holds for bullion near a record after that escalation in the Middle East, Shery.
Yeah, the Japanese yen, though, not doing much, not really trading as a haven asset, given, of course, that we're very much watching where the BOJ and the Fed go from here. But we'll also be watching, of course, the vice presidential debate. It's going to be a 90-minute forum. Bloomberg will bring you those live. It will be the first and potentially only debate before the November election on Tuesday by the vice presidential nominees. And all of this as we have rising geopolitical tensions in the Middle East. This is Bloomberg.